Nancy, looking outside of the U.S., I'm looking at your notes, and you say the pessimism over China might be a little overdone, and you're starting to tiptoe back into names exposed to China. You think China might surprise on the upside?
I do, Christine. I mean, if you look at the commodities index in China, it's up 15% since May. Okay, that's one data point. But then if you look at U.S. companies that have reported recently, like Lululemon, up 61% in China year over year, and Starbucks up 50% in their previous quarter year over year, you have to wonder what's going on under the surface. And I think, as is always the case, just as everyone was super excited about the reopening and it didn't pan out as many thought, I think they're overly pessimistic about the Chinese economy currently. And we know that China and the Central Politburo have a lot of levers to pull that are less easy to do in maybe a more democratic society. So I think you can feel justified in stepping into some of these U.S. names with exposure to China. NXPI is a semiconductor chip company that we like with large exposure to China, and we're starting to take a look at Nike. And we haven't bought it yet, but we're starting to take a look at the fundamentals, because I think you're going to even see an increase in demand there too.
You mentioned Starbucks as one of the companies that you like that has exposure to China. And while many people, myself included, might consider caffeine or coffee a need to have, not a nice to have, nonetheless, it is somewhat of an expensive product for many people. And if you're in the middle of a cost of living crisis, you might cut back on your second cup of Starbucks each day. So why do you think that Starbucks is going to hold up?
Well, I think the new CEO, Laxman, has proven himself to be kind of a global citizen, and he has really focused on China as one area in particular that they can improve their performance in. So the average, I think the average Chinese consumer consumes about 12 cups of coffee a year, whereas in Japan it's 200, in the U.S. it's something like 380. So they have created some new ideas like cream cheese lattes. Doesn't sound good to me, but it's been very popular in China. And they've also developed a strategy that they call theater in the front, factory in the back. And what they're doing is they're leveraging their new supply chain officers' efficiency plans, and I think will be able to not only generate the earnings growth, but the revenue growth targets that they've set up and the same store comps. So I just think when you have a good operator that has global experience, and he has demonstrated that in his previous roles, that's the kind of management team that will lead you out of this problem. Add to that, globally, they have 75 million digital users of the app. And that's the way that we think you sustain growth and margins. So they're using digitization in developing new products and in improving margins. So you just take your time and accumulate it over time. You're getting paid over 2%. It's got 10% dividend growth. It's hard not to like the stock here.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.